hasn't really been much of an impact, particularly on the mortgage banking side, which is where I think most investors had concerns. Numbers for the second quarter were actually up a little bit on a linked quarter basis relative to the first quarter, with revenues actually staying flat. But you had better origination volumes, but the gain on sale margins that they recognize on the loans they sell came in a touch. The impact, I think, where you're seeing it is their pipeline coming out of the quarter for new applications was down about 15 or 20%. It'll be interesting to see on the call sort of how they flesh out the commentary on a go-forward basis, because we did also see a nice shift in the makeup of the applications, or the makeup of the loans they underwrote, with a bigger shift towards a purchase market away from the refi business, which I think will help keep volumes up for them as we go out into the rest of 2013.
That is a concern. I mean, net interest margin, which is basically how profitable their loans are, fell a bit.
Yeah, it was down 2 basis points on a linked quarter. Some of that, again, is more optical, I think, than actually underlying. If you sort of look at the flows in the quarter, they had a pretty decent inflow on the deposit side, and so that helps the overall net interest income that the actual dollars that they report, but the margin, so the measurement is a little bit lower. So it's kind of a volume versus rate game for them. I think what you'll see is as we go forward, the commentary there should probably be a little bit better given the move that we've seen in rates, particularly given that they have so much liquidity that they can deploy out into securities and loans. We think that as the year goes on, that margin should stabilize some.